A very good morning to all my dear students. As the festive season has just begun, so I hope you are not just wondering and enjoying the festivities, you are enjoying your festivals with your CA Inter books because your exams are just approaching. So along with the enjoyment that is around in the air, you should concentrate on your studies as well. So let's begin today's lecture. We have already done half of the share capital and debentures in the previous session, and today we are going to complete the revision section of share capital and debentures. All right, so I hope no doubts till now, and you don't have any doubts, but let me ask you what we have done till section 56. We have revised our share capital and provisions. So before we move forward for today's session, proceeding from section 56, we'll be finishing off till debentures, section 62. Whole of the chapter will be completed today. So my question to all my dear students is, which is a revision question, because we cannot revise all the previous sections because it is already a revisionary session. So just the one last that we have done, section 56. I want to ask you, what is the difference between transfer and transmission of securities? So when we are transferring the securities, we are voluntarily transferring. Mr. A wants to transfer his securities to Mr. B. Transfer deed will be prepared, and on the basis of that, A will go to the company and he will tell that please now remove my name from the register of members and add B's name because I have transferred my shares to Mr. B. But is this the case with transmission? No, the transmission is not transferring. That means the shares get transmitted to your name in case of any death of a person. The shares get transmitted to the legal representative. In case of insolvency and lunatic person also, the person, another person as appointed by the court who will administer these shares will be transferred to him. So my question to all of you is, can company refuse this transfer to register this transfer of shares? Yes or no? Can a company give any refusal for registration, and what can happen? Can we file an appeal? Well done. Let me see how many students are here also. Good morning, Om Gupta. Good morning, Nagesh. Good morning, Abhijit, Rishabh, Sunil, Shoaib, Khushbu, Kritika, Manasvitha, all of you. Good morning, children. So you have to answer me. Tell me, children, why you're not able to answer in the chat box. Okay, so yes, we can. The company can refuse to accept this transfer and transmission. How this happens, this is what we are going to understand and beginning in today's lecture. Now, when Mr. A went to company and he said that, look, I want to get my name removed and please add B's name. So there will be two scenarios. One is private company, another is public company. In case private company refuses, private company says, no, we are not going to remove your name. We are not going to register B's name, that is the new person to whom the shares have been transferred. Private company is not willing, accepting the name of B. Then what will private company do? Private company will send the notice of refusal to Mr. B within 30 days. All right. So company within 30 days, once they have received this private company limited by shares, it will refuse to register the transfer or transmission. Both of the cases can be refused. Private company has the right to refuse. Within 30 days of the transfer deed that you have intimated to the company, within 30 days of that, private company will send the notice to Mr. B, look, we are not going to register your name. Then what will transferee, where it is written in the act and the book transferee, you can write down the example, transferor, Mr. A, we have taken, and to whom we are transferring the shares is Mr. B in our example. So Mr. B will get the notice within 30 days of the transfer deed. Company will send him the notice. And within how much time period now this Mr. B can file an appeal? Within further 60 days. So we can say if no notice have been received, then 60 days. But if you have received the notice in 30 days, then in further 30 days, B shall file the appeal to the tribunal. Company will have to give the reasons that these are the reasons. That's why we are not registering your name. There might be some error in the register of members. This certain rectification might be required. Any kind of reasons the company can give. So within 30 days, the company has to give, and further within 30 days, the appeal has to be filed. Then now, what is 60 days? Generally, the problem occurs over here is, what is the provision regarding 60 days? So if no notice of refusal has been received, then within 60 days of the transfer deed, so actually it is 60 days only. Ya to company will send in 30 days, and then in 30 days you're filing an appeal. Or if no notice of refusal have been received, within 60 days, we can go to the tribunal and file an appeal. Clear, private company? So what happened in case of a public company? Public company shares are freely transferable. There is no, it is always a valid and enforceable contract whenever public company is transferring its shares. Private company can put restrictions also, but still transfer done as per section 56 is absolutely valid. Now, if public company refuses to transfer the shares, public company cannot refuse without sufficient cause. It has to have a very strong reason. Why? Because the shares are freely transferable of public company. So public company has to give a valid reason why it is not taking up the transfer of the shares. In 60 days, notice has to be sent. A company will again send a notice in 30 days to Mr. B. Appeal can be filed in 60 days. He can go to the tribunal in 60 days, the appeal can be filed. And if no notice have been received, then within 90 days. So 30 days provision is same, but here balance 30 days have been given. Their balance 60 days time period has been given for filing an appeal to the tribunal. And what is this Mr. Tribunal going to do? Court will listen to the order. He will pass an order. He will see what are the reasons for not registering the transfer. And within 10 days, he has to, within the 10 days of order, tribunal passes the order. Okay, fine, everything is done. If he sends an order to the company, within 10 days of the order of the tribunal, transfer has to be made. Either the transfer or transmission shall take place in 10 days, or the rectification of registers can also be done. If there was certain error, then tribunal can suggest the rectification of register as well. And on this rectification, damages needs to be paid to any party who has suffered a loss because of this kind of transfer. In case of any contravention of order, fine and imprisonment will be imposed. Now, since it's a revision lecture, so my question to my dear class, how much fine shall be imposed on the company? And what is the imprisonment? What is the penalty for this section's contravention of section 58? Is there any penalty and fine? Please answer me. Sir, I hope the chat is not disabled, because I think students are not able to answer me back. Yes, Abhijit, you want to say something? Yes, Abhijit.
Ma'am, the chat box is disabled. That's why we are not able to send messages, ma'am.
Yes, that's why I'm wondering how come my students not answering. Otherwise, they always answer very quickly. So I would request the admin at the back to please see if the chat, if the students are able to answer me on the chat box. All right. So meanwhile, the corrections are happening in the chat box. Let me show you the penalty from the study material as well. So section 58, this is the entire procedure for the transfer of securities. The notice will be sent within 30 days. So you have to highlight this kind of chart that I have shown you. It is very important you make such kind of charts for the brief summaries at the end days to revise. So what will happen in case of private company? 30 days and then further 30 days. This you have to underline. See, beautifully study material has bolded out each and everything so that you don't have to figure out how and where to look at.
Ma'am?
Yes, sir. Yes, sir.
Ma'am, chat disable करनी है? Enable.
Yes, sir. That's why then only they will be able to answer me back home and they can ask doubts also.
Ma'am, but scribbling के chances हैं.
Okay, no, they will not do. They are good students. They'll not scribble. You can
Okay,
on the chat.
Okay.
And students, you have to behave yourself and you are only supposed to answer whatever I'm asking. All right? No scribbling on this.
Chat has enable.
Thank you so much, sir. Thank you.
Okay.
So in 30 days, they will be filing an appeal, and if no notice has been received within 60 days. Application received by private company, transferee did not respond. He may advance the appeal. So 25th November, you have sent an application, no response, then within time period that has been specified, within 30 days if he has responded, or within 60 days. So by 24th January, that is 60 days time period, he can file an appeal to the tribunal that my transfer deed has not been accepted and transfer of shares has not happened. What happens in case of public company? So subsection 4, you can write down at the side public company, upar wala it was private. Where it is written other than public company we are talking about, then it is private. So here what will happen? 60 days of the refusal, and if no notice has been received, then within 90 days. So in public company, same date, but you have seen the date has been changed because 90 days time period has to be seen in case of a public company. Then within how many days the tribunal's order, the registration has to be done? Well done, Abhijit, for the penalty that you have given. That's absolutely correct. And within how many days of the tribunal's order, the transfer shall be made? Absolutely correct. Within 10 days. Any contravention, penalty of 1 year to 3 years and 1 lakh to 5 lakh will be charged. So this is your summary, and you can write on the penalty also over here in your notes, and that's it. This topic is over. Notice of refusal, the private company will send to the transferee within 30 days stating the reasons. False, because notice has to be given to both the transferee and transfer. Notice will be given to both, because you will tell A also na, that we are not transferring your shares. Divya Verma, it's not 30 days, it's 10 days of the order of tribunal. Abhijit and Om Prakash are correct. All right. So we have finished with section 58. Now let's move to rectification of register of members, section 59. What is the meaning of rectification of registers? Many a times if there is any error in the register, that needs to be rectified. For that, section 59 needs to be followed. If any correction needs to be made. So how will the rectification of register happens? The appeal can be filed for that if without sufficient cause, name of any person. So it means there was no reason was given and name of any person has been entered in the register of members. Or you have omitted to add, there was a shareholder, Mr. A, his name has not been entered in the register of members. Or you are making a delay. I have taken up the shares in your company and now my name needs to be entered in the... In what section do we maintain the register of members? Do you remember? If you have already done management and administration chapters. In what section? Ayushi 180? No. Shoaib, correct. Section 88 talks about the register of members. So now this register of members, which is maintained under section 88, if you have entered a wrong name or you have not entered the name or you have omitted to enter the name, you have made any delay in entering the name, then what this person can do? What remedy is available to this person? He can file an appeal to the tribunal that please make a rectification for this register. We are using the word tribunal again and again. Can you tell me what is the full name of this tribunal? What is the name of this tribunal? National Company Law Tribunal. Very good. NCLT. That is the main body. That is the main court which handles all the queries related to the Companies Act. Okay. So either appeal will be made to the tribunal or to the competent court outside India specified by CG if the members or debenture holders are residing outside. So if you're a debenture holder or a shareholder who is living outside India, then you can make an appeal to the court which is outside India, which central government has specified, or for the rectification, you can make an appeal to the tribunal. And what will tribunal do after hearing both the parties? It will say that transfer and transmission has to be made again within how many days? Section 58, also 10 days of the order, transfer has to be made. Same here also in section 59. So the provisions which are similar, it becomes very easy to learn. So 30 days, हमेशा जो common वाला है, first notice आना 30 days. Private company 60 days further, if no notice received. Public company no notice received 90. 60-90 you can learn and then you can remember the balance 30 and 60. Within how many days the tribunal's order? 10 days, and section 59 also 10 days. You have to either rectify the register or you have to pass the. Please remember there is a difference between section 58 and 59. 58 means you're refusing to accept the transfer. 59, you have either not entered or entered the name wrong. Any problem has occurred in the register of members. That is what we are rectifying in section 15. So this section protects the right of holder of securities to transfer such securities. Any person acquiring the securities shall be entitled to voting right unless the voting rights have been suspended. So whatsoever voting rights were given to that person who has transferred, now it will get transferred to the transferee also, unless they have been suspended by the tribunal. And any contravention done by this tribunal on an application direct the company or a depository to set the contravention right and rectify the registers. So whatever contraventions have been happening, they have to be rectified. Section 58 and 59 over. Now we are moving to section 61, 62, 63, 66, 68, which talks about your alteration of share capital. Can we alter the share capital? What is the meaning of altering the share capital, children? What do you mean when you're altering the share capital? Yes, good. So all of you have correctly answered. Alteration means either increasing, decreasing, replacement. Okay. It's increasing and decreasing the share capital. How can you replace home? You're not saying that instead of shares, you're replacing it, but okay, conversions can happen. So that is also part of that. So converting the shares into stock, if you talk about. So in these alteration of share capital, the first topic that we're going to start up with is alteration of share capital, that is section 61. Now, company limited by shares has the power to alter the share capital. Now, where is the authorized share capital of the company given? In Companies Act, where are you supposed to write the authorized share capital of the company? Is it MOA or AOA? It is always mentioned in the Memorandum of Association of the company. So now, since you are altering the share capital, means you're changing the authorized share capital of the company, then you have to alter the Memorandum of Association also. Provided you have the authority to alter, who will give you the authority? Articles have to give you the authority. Because children, our rules and regulations are defined under AOA. So AOA will provide me the authority that, okay, company, you have the power to alter your share capital. Authorized share capital is written under the capital clause of Memorandum of Association. So if you are making any changes in the authorized share capital, first point is MOA needs to be altered. MCQ में ये point पूछा जा सकता है. Do we need to alter our MOA? And all my students have answered correctly in the chat box. Yes, ma'am. MOA will get altered if you are altering, increasing or decreasing any of the authorized share capital of the company. So there are 5 ways in which we are going to learn how to alter the share capital. Number 1 point is increasing the authorized share capital. So company can increase its share capital as it thinks expedient means jitna bhi chahe. How much it wants, it can increase its authorized. What is the authorized share capital? The company has planned to do the business and thought that, okay, I will do the business. I will raise the capital from the public around 10 crore. So this is just a figure which the company has thought of starting the business. Now, if the company feels that I'm expanding my business and I need to increase my authorized share capital, it can increase to whatever amount it feels like. Second way of altering it, consolidating and dividing whole or part of its share capital into shares of larger amount. So what is this consolidation and division? Consolidation means when you are holding all the shares together. When you're holding all the shares together, for example, they are rupees 10 per share each, they are consolidated and then they are further divided into rupees 100 per share. So there were 10 shares of rupees 10 each. Now you have made the shares of 1 share of rupees 100 each. So how you have done the consolidation, that depends upon the company. They can consolidate and divide it into shares of larger amount. Now voting rights, it says the voting rights of the shareholders should not be changed. If I was a shareholder of holding rupees 10 per share, 1 share of rupees 10, say for example, if I was holding 1 share of rupees 10, Now, if I'm holding the shares of rupees 100 per share, or you have increased it from rupees 100 to rupees 1000 per share, whatever changes you're making, my voting rights related to that share should not change. If you are trying to change my voting rights because of this consolidation and division, then approval has to be taken from the tribunal. Tribunal will step in and you have to ask the tribunal that whether we can vary the voting rights of the shareholders. Third type is converting fully paid shares into stock or vice versa. So fully paid up shares, they're consolidated and converted into stock, or the stock is broken up into different kind of shares. Then subdividing whole of the share capital into shares of smaller amount. So now you had the shares of huge amount, now rupees 100 per share, now you're dividing it into rupees 10. So there were 10 share of rupees 100 per share, now you're increasing it to 100 for rupees 10 per share. All right, so you can subdivide into smaller amount also. B and D point are interrelated. B point, you are dividing, consolidating into larger amount. And in D point, you are dividing into smaller amount. Splitting up, absolutely correct. But what is the important point to understand in D point is that whenever you are dividing the shares into smaller amount, the amount paid and unpaid on the shares shall be the same. Now, how can this happen, ma'am? I have paid, say, for example, the share was rupees 100 per share. You have paid up rupees 70. How much was pending? Rupees 30. Now that share has been divided into rupees 10 per share. So the same proportion, it will taken rupees 7 has been paid. Now rupees 3 is pending. So whatever subscriptions you have split up, the same proportion amount will remain as unpaid on the previous years. And the last one is cancel the shares which have not been taken up and reduce the share capital. So how are you altering? You are cancelling the shares which have not been taken up, unsubscribed share capital. Nobody has taken up that. So for example, out of 100 crores, 80 crores has been subscribed, 20 crores is not taken up by the public. So you are cancelling those shares. Now we don't need unsubscribed share capital if you're cancelling. That is also altering of the share capital. So authorized share capital was 100 crore. Now you just change and show it 80 crore only, those which has been subscribed. So all these alterations in the share capital can be made. 5 methods you have to learn: increase, consolidate and subdivide, convert, subdivide into smaller parts, and cancel the shares. Children, if you get these kind of 3 or 4 marks direct, straightforward questions, agar learn kara hua hai, it is very, you feel very lucky that I have learned it and now I'm going to revise it. I'm going to write. So 4 out of 4 you get if you write it correctly. So underline the points: increasing, consolidating, converting, subdividing, cancelling. And in the exam, you will recall and write the whole sentences. But don't just write the sub points in the exam. In exam, you have to write all the points. Does this cancelling of the shares amounts to reduction of share capital? True or false? Yes, 90% subscription is relating to your allotment of shares. That has to be done, Vijay. That's correct. Then only the shares will be allotted. Now, if 90% is not subscribed, we have anyways refunded. Here we are talking about the further processing of altering the share. So cancelling of the shares will be reduction of share capital, children. True or false? What is your say on this? False. Very good. Khushbu is saying true. Khushbu, see on the screen, I've written the second point. Cancelling of the shares shall not deem to be reduction of share capital. So it is not reduction of share capital. These are the important points which you should remember. Let me see in the study also. Let's flip through the pages of study material. And all these examples, you have to read example number 17, which is given related to your period of 10 days. Please read these examples also. This is what we are doing, alteration as of now. So again, see, study has defined what is alteration, authorized capital, called up capital, so that children who have forgotten chapter 1, they can give it a reading. So again, needless to say, they have highlighted the points: increase, consolidate, convert, subdivide, cancel. Exam days, just flip the pages, read these words and flip the pages. But do read the words. Okay, let me give you one important tip for examination day also. Many a times we feel that I have learned it and now I remember everything. So I will just see, okay, section 61 talks about this, headings pardon. Content is not revised. A day before exam, these important highlighted points, you should give them a reading once, bacha, because you have done so much of the syllabus now. It's very normal to tend to forget certain things. So one quick flip through your eyes is very important of the entire syllabus. Yes, of the entire syllabus. You cannot say that I will just read these chapters before the exam, others have revised. Definitely, I understand you must have revised them well. But one flip through of the pages, at least of the company's app, all the pages have to be flipped through immediately in front of your eyes. But don't start learning during that day, just reading and moving forward. So resolution has to be passed in the general meeting for this kind of changes that you're making, and NCLT's approval is required. I told you where you're changing the voting rights. Examiner can give you MCQ question. You're changing the voting rights. Tribunal's approval is required. Yes. In point number B, we have already discussed. And 30 days of alteration notice has to be given that now the company's the same shall be recorded and altered in the company's memorandum. And this is not the reduction of share capital. Isko important mark kar lena. It is important line that the cancelling of the shares will not amount to reduction of share. Now, what does section 62? Section 62 is your favorite. It talks about the rights issue. Now we are moving to section 62, that is rights issue. What is the meaning of rights issue? Rights issue का मतलब क्या होता है? ESOPs issue करना होता है rights issue या sweat equity shares होता है? क्या होता है rights issue? Rights issue means the rights given to the existing security holders to come and take up the shares in my company. So when you were doing prospectus chapter, you must have heard that public company and private company can raise the money by way of rights issue, bonus issue, IPO, FPO, OFS. There we study in detail about IPO, FPO and OFS. But here in this chapter, we teach you about section 62. That is how the rights issue actually happen. When the company is in need of money, it will, instead of going to the outsiders, very good, those who have written correct, Sunil, Abhijit, Abhishek, all of you are correct. Shares are offered to the existing shareholders at less price. Good. So in case of rights issue, company is in need of money. Instead of going to the outsiders, it will going to the existing security holders only and asking them to take up additional shares in the company. So this right issue is given to the existing shareholders. So first method of further issue of share capital is under section 62, subsection 1 is by giving a rights issue shares rights to the existing shareholders to buy the shares in the company. So it says when the company having a share capital wants to increase its share subscribed capital, shares can be offered to the holders of the equity shares existing on the date of offer. You should already be holding the shares in a company. To them only the rights issue can be given. Can we give rights issue to the public? No. You should be an existing shareholder to whom the rights issue are given. In what proportion to the paid up capital? So how much share capital you have already holding, in proportion to that rights issue will be made. How the rights issue are made? Letter of offer is sent, and in the notice following things have to be specified. Number one, the number of shares to be offered. If you're holding 5 shares, suppose I'm telling you, okay, 3 shares more you can take in proportion. Whatever paid up capital you have made, in proportion to that, number of shares can be offered. What is the time period within which the offer shall be accepted? Quickly tell me the time period. You have learned it by now. You know it. What is the time period? Can I accept the rights issue in 15 days? The minimum time period is at least within 15 days, the offer shall be accepted. And if it is not accepted in 15 days, then what is the maximum time period, children? Yes, Komalpreet. Good. Abhijit. Abhijit has given 7 days time period also. Okay. So 15 is the minimum days and 30. So if you're accepting within less than minimum days, the minimum 7 days. After 7 days, you can accept it. So minimum 15 days. And if you have not accepted in 15 days, then maximum 30 days from the date of the offer. And if you have not accepted within this limit, then it shall deem to have been declined. Means you have declined, you're not going to take up the right shares in the company. Confirm the right to re-announce all or any of the shares to the existing in favor of. So the right to re-announce it or renunciation right is also given, means you're transferring your shares. Your favor mein you're transferring your rights. So that right is also given, but you have to confirm that with whose favor you have transferred or re-announced this right that has been given to the existing shareholder. All right. So now I think for the detailed discussion of this matter, let's move to the study material because it's very, very huge topic and I don't want to miss out anything from the rights issue. So suppose company is announcing 1:10 rights issue, means existing shareholders can buy one extra share for every 10 years. So this is in proportion to your, what I was telling you, paid up cap. So 1:10 means if you're holding 10 shares, you can take up 1 share. If I say 2:30 or 1:15, so 15 shares you should be holding, then you can take up 1 share. All right, so you can understand this Suzlon Energy Limited, what practical insight they have given, how the rights issue actually takes place. Provisions of SEBI, anyways, you know, listed company, SEBI has to be followed. And if it is unlisted company or private company, provisions of the Act and rules have to be followed. What is this section 23, subsection 1 and 2? That is talking about your IPOs and private placements that you can make. So this is the method of raising the shares rights issue. SR needs to be passed, plus the offer has to be given through notice. If you're giving ESOPs, we'll be discussing ESOPs also, and to any person for cash and non-constitution. So SR needs to be passed in all these 3 cases. If the company is issuing ESOPs to its members, what is the meaning of ESOPs? You're giving stock option securities to your existing employees. You're giving the option to buy the shares of the company. Then also the company needs to pass the SR. And if you're issuing the rights shares, then also SR needs to plus the offer has to be given. I just showed you in the notes how the offer of notice has to be given. This is the notice specifying the time period. And one important point I wanted to tell you over here is if it is a private company which has given the 90% of the shareholders agree, then the time period of 15 days can be reduced. Okay. If 90% of the members have given their consent in writing or in the electronic mode, then you can have shorter time period from 15 to 30 days. Time period can also be reduced. All right. Okay, this is what we have done. And if any decline is made between the shareholders, then it should not be disadvantages, means it should not be harming them. Any right which has been given can have been disposed of or declined. It should not be harmful or disadvantageous to the shareholder of the company. Now, what is employee stock option? Employee stock option is another very, very important topic, children. SR needs to be passed if employees are given the shares in a company. This ESOPs have to be approved by SR or OR. Examiner can ask you OR or SR, you will write SR needs to be passed. It's an option given to the officers, directors, or employees of the company or holding a subsidiary company. So can I issue ESOPs to my employees of holding company? Yes, you can. So it can be issued to holding a subsidiary company also, if any which give directors the benefit of the right to purchase or subscribe the shares at a future date. Here you are not, what is the buying of the shares? You buy the shares and you pay the money to the company. Here you are not buying the shares immediately. You are agreeing to buy them at a future date at a predetermined price. So we have decided the price and you can simply buy them at a future date. So I just now told you that SR is compulsory in case of ESOPs. But there are 3 cases where OR can be passed. What are those 3 cases? Private company, if the private company has not defaulted in filing the annual return and financial statement, then you can pass OR. Or IFSC public company, in those cases, you can pass OR. Or in case of listed companies which have been prescribed by SEBI, that the benefit to the employees have been given, conditions have been given, their OR is also sufficient. In all other cases, SR needs to be passed. Even if to any person, if so authorized by SR, even if they're not within the above category. So what happens in case of a further issues are made for consideration, cash or consideration other cash, then SR needs to be passed and a valuation report has to be prepared. What is the price to which the share will be taken? Registered value will finalize that price. So if the examiner asks you what is the length of the time period for further issue of share capital for giving acceptance, that is the rights issue. So the notice will specify, first of all, the notice will specify the time period It should not be less than 15 days and not more than 30 days. So for learning purposes, 15 to 30 days is absolutely correct. Along with that, the rule 12A that has been inserted has to be written as it is, that the time period with which the offer shall be made shall not be less than 7 days. So minimum 7 days have to be given time period from the date of offer. Dispatch of notice. For how much time period the notice has to be given? At least 3 days before the opening of the issue. So minimum 3 days. If I'm giving you the notice just 1 day before the opening of the offer, then that is not acceptable. Minimum 3 days notice before opening the option has to be given for the rights issue. You can read this example number 21. Notice of rights was dispatched by email ID in 2 days advance. Out of 4,230 members, 3,000 members holding 94% acknowledges and consented the shorter period of. Now, what is it trying to explain you? He is telling you about this 90% of the time. So again, in private company, if any 90% of the members are agreeing, then the shorter notice period can be given. So 15 to 30 days is your rights issue that you have spoken about, the time period within which it should be accepted. Here we are talking about dispatching of the notice that you're giving to the shareholders that, okay, we are coming up with the rights issue for you. That shall be sent up within at least 3 days before the opening of the issue. Now, agar private company, 90% of the shareholders have consented in writing, then you can use a shorter period. Say for in this, 2 days advance notice has been sent up and 94% of the shares acknowledges the mail and consented for the shorter period. Despite the mode of dispatching and furnishing the consent is valid, the notice stands invalid because at least, where did it go? Because at least 90% of the members shall give their consent to the shorter notice, whereas in this case, 72% members have. So it says not members holding the shares. It shall be out of 3,000, out of 4,000, 3,000 are members again. So only 72% of the members have given. So 90% of the members. So 90% of 4230 if you do. So that much number of members should have given their consent. Then only the shorter period is valid. Here the number of members to be considered, not their shareholding. Please mark it important. Number of members का 90% करना है, not about their shareholding. Now, Section 62 will not be applicable on conversion of debentures or loan into equity shares, where you're converting convertible debentures, where you're converting the debentures into equity shares to increase your share capital, then Section 62 is not applicable. Provided SR has been passed. So you're talking about the convertible debentures. There are, when we do the topic of debentures today, there also you will learn about non-convertible and convertible debentures. SR has to be passed for such kind of shareholders and prior to the issue of debenture. So when you issued the convertible debentures, their SR was passed, then it's absolutely fine. Now again, you don't need to pass the SR. Are you understanding? When you have issued the debentures, convertible debentures are those debentures which can be converted into equity shares later. So at that time, Section 62 is not applicable, means you don't need to send the notice again, you don't need to pass the SR, provided SR was passed when these debentures were issued. You can write down this line. Provided SR was passed when the debentures were issued. Compulsory conversion. Or government is directing that, okay, fine, it has become compulsory for you to convert the shares into debentures, and government is doing it in the public interest. Then all the terms and conditions as per government have to be followed. Even if the terms on the raising of do not provide an option for, even if the terms are not for the option of conversion, then also you have to follow whatever government is considering, provided government will consider the financial position, the issue of debentures, rate of debentures, interest given on such debentures. All these points have to be considered by the government while directing the conversion of debentures into shares. So non-convertible debentures, if the SR was passed at the time of issue, then only, then no need of passing the SR again on conversion. So you are converting the debentures into shares again, you are raising a share capital. So if you have passed the SR during the issue only, then it's absolutely fine. You don't need to pass it again. All these points we have done, and government can convert the debentures into shares as per the government's choice, provided the company has to accept, acceptance has to be given within 60 days from the approval which has come. Here is a 60 days terms and conditions of the approval, then appeal can be filed within 60 days. So if you have not accepted this kind of conversion, company is not willing, company is not happy, that do not want to convert our loan or into equity, the debentures, they are not happy with the decision of government, then appeal can be filed to the tribunal within 60 days and tribunal will pass the order after considering the following matters. Section 62 will not apply to Nidhi companies. Nidhi companies shall ensure that the interests of the shareholders are protected. Is that fine? Now let's move to a very, very simple short section. So section 61, we have done alteration of share capital. So ESOPs and cash consideration we have done. We have also referred to the study for detailed discussion of section 62. Now we are moving to the issue of bonus shares. Do you remember we have created CRR in the previous session when we were talking about CRR? What is the use of CRR? Capital redemption reserve is created when we were talking about redemption of preference shares amount equal to the nominal value of the shares. SCRR was created. What is the use of CRR? Okay, 5 answers, 6, 7, 8. Good. All of you have answered it correctly for issuing fully paid bonus shares. So that's why I enjoy talking to you on the chat box just to see whether you are listening or you're sleeping in the class. So good. All of you have answered it correctly. So a company can issue fully paid shares out of 3 places, out of its free reserves, other than revaluation reserve. So any revaluation of assets happened and reserve has been created. Can we use revaluation reserve for issuing bonus shares? The answer is no. So यहाँ पे asterisk mark करके side पे अलग से लिख लो. Revaluation reserve cannot be used for issuing bonus shares. Good, Khushbu, that's correct. So company will issue fully paid shares only out of free reserves, SPA, securities premium account, and the CRR which has been created. लिखा ही हुआ है नीचे. Bonus shares will not be issued out of the reserves created for the revaluation of assets. Can the bonus shares be issued in lieu of dividend? Okay, I thought that I'm not going to give you the dividend. Company says that we will give you the bonus shares instead of dividend. Can the company do that? Can we give the bonus shares in lieu of dividend? Yes, ma'am, or no, ma'am? So absolutely no. So 2 things that you have to remember is, number 1, revaluation reserve will not be used for paying the bonus shares, and second is dividend cannot be, you cannot give the bonus shares in lieu of the dividend. Excellent. Now again, so I told you this chapter share capital and debentures is all about learning the provisions. What is the process? So in the previous classes, we learned the process of DVRs, sweat equity shares, preference shares, redemption of them. Then we did the transfer and transmission. Now we are going to do how the bonus shares, what is the procedure for bonus shares, what is the procedure for debentures, what is the procedure for ESOPs and rights issue we have done. What is the procedure for reduction we will be doing, procedure for the buyback of shares. So every procedure has to be given. If you don't remember the first point, always remember it shall be authorized by articles. That is the basic point given in all these. Bonus shares shall be issued. Alteration of articles also I told you approval has to be given in the articles, then only you alter the memorandum. So articles have to authorize. Then board will authorize the recommendation that, okay, fine, the resolutions will be passed by the board in the general meeting. That board will recommend bonus shares to be issued to the employees. Okay, Komalpreet, that's okay. But as far as your Companies Act is concerned, bonus shares cannot be issued in lieu of dividend. That is something else that you're talking about, the dividend stock. But bonus shares cannot be issued. So company is not giving dividend. Instead of that, if company is thinking, then it cannot do that. In lieu of that means, uski jagah par you can. Okay. So requirements for bonus shares authorized by the articles, recommendation from board has to be taken. Company should not have defaulted in paying the interest or principal of the fixed deposits. Now, just imagine a company is not repaying the fixed deposits, defaulting, the deposits have been taken from outsiders and you need to pay the interest and principal amount has to be repaid. Now, company is not paying that and instead of that is giving bonus shares. Bonus shares can be given only if you are in a good financial position company. Like, you should not be defaulting in your own payments. If you're not paying the statutory due of employees, PF nahi diya, gratuity nahi diya, and you're giving bonus shares, then also it is not done. So that is how you have to learn and remember the defaults. The company should not be defaulting in paying the interest of the deposits. Company should not be defaulting in paying the statutory due of employees. The partly paid shares outstanding on the date were made fully paid. So partly paid shares should be made fully paid, then only the bonus shares can be given. And all the conditions as prescribed bonus once announced by the board shall not subsequently withdraw. So board cannot withdraw the conditions once it has been announced. The bonus shares have to be issued to the employees. All right. So this is all about your section 63. That is issue of bonus shares. Number one, you should know the bonus shares will be paid out of free reserves. The reserves which are made out of profit. Okay. SPA and CRR. CRR is an important point. Revaluation reserve will not be used. Dividend in place of that cannot be used. Articles authorization, board recommendation, 2 defaults you have to remember. Partly paid shares shall be made fully paid up, and the conditions given for the bonus shares shall not have been withdrawn it. Okay, so we have completed till section 63. Now we will move to one important section, small section, section 64. We will do, and then we will take a break. Notice to be given to the register for alteration of the share capital. Now, what is it trying to tell you? You have altered the share capital as per section 61. What were the methods of alteration? Let's have a quick revision. वही वाला conversion, cancellation वाला 5 methods. मुझे जल्दी जल्दी headings बताओ. How have you altered your share capital under section 61? Increase, consolidate, divide, convert, cancel, and subdividing in small parts. So let me read it out. Who is the first one? Divya Verma, good. Ayushi, Ummal, Om Krishnam has given all the points correctly. Good. So now that you have made that alteration in share capital, okay, fine. Now come back. Notice to be given to the registrar. You always have to inform the registrar whatever things you are doing. Please keep your registrar informed. Anything you are doing, registrar has to be informed if the company is altering the share capital under section 61. Order was made by the government under section 62 for increasing. We have just done. The government has passed the order for converting the debentures into stock for increasing the share capital. Or you have redeemed any of your redeemable preference shares. Then in these cases, under the SH7, notice has to be given within 30 days of such alteration. What is this alteration? Whether you have increased or decreased the share capital, within 30 days of whatever alteration you have made, notice has to be given to the registrar along with the copy of your memorandum that this is the authorization share capital we have altered or increased. And any penalty for any default which has been made, penalty of 500 for each default subject to maximum 5 lakhs and 1 lakh for the OID will be cut. So if you should not be making a default, so simply how we have to remember this section 64, any alteration of share capital you have made, any redemption of preference shares, any increase in authorized share capital because of the government orders that has been passed, you have to file a copy in SH7 with the registrar within 30 days and along with a copy of memorandum. If you have committed a default, 500 for each day, maximum fine is rupees 5 lakh for company and 1 lakh for the officer in default. So I request you go through section 56 to Laker section 64, give it a quick revision, read it from the study material, and then we will proceed after a small break. Let's take a break. Answers Mohammed Shoaib, Mr. Rom Gupta, all the students over here in admin query. Get your answers also. Very good. All right. Let's move ahead for the reduction of share capital. So we have understood the altering of the share capital, and one point we just did before going to the break, that notice has to be sent to the registrar also for any alteration made. Now we're going to understand section 66. So again, section 66 is very elaborative, so I don't want to miss a single point. We're going to take up section 66 from your module itself, but always you should keep making short notes from the module itself, whatever points we are highlighting, whatever points we're understanding, should keep writing it down as brief summary. So can we reduce the share capital? So when we began the session under section 61, I asked you, can we increase the share capital? And now I'm asking you, can we reduce the share capital? Is it possible to reduce the share capital? Yes, ma'am, or no, ma'am? So section 66 has to be followed. Yes, we can reduce the share capital. Who is going to be affected if we are reducing the share capital? Will the creditors of the company get affected? Definitely you are affecting the creditors, the debt holders are to be paid out. So they will also be affected because you're reducing the share capital, their interests have to be considered. So yes, you have to take their approval also. They should not be disapproving to this kind of reduction of share capital, because they can also file an appeal if they're not happy with your reduction of share capital. So it says conservation of capital is the main principle, because reduction diminishes the fund. You're reducing your funds. Say, for example, I will be teaching you about extinguishing. You had 100 crores of authorized share capital. Now you have kept it till 80 crores only. So you have reduced your share capital. So the shareholders have benefited. Those who have just paid rupees 8 per share for 1 crore. So they for 10 crore shares, they don't need to pay the balance paid up capital on their share, because you have reduced your entire authorized share capital. So you're diminishing the fund, you're reducing, out of which the debts and creditors were to be paid out. Therefore, it will adversely impact. Sometimes it is necessary to bring out the changes. So we have to very closely understand section 66 has to be very, very carefully followed. Now here approval and confirmation from tribunal is also needed. Do we need confirmation from tribunal under section 61? When we were doing alteration in share capital, were we going to the tribunal? No, ma'am, we were not going. We were just altering it, we're passing SR and doing all the kind of alteration. But here you need the approval from tribunal also. No, Shoaib, we did not go to the tribunal for the alteration of share capital. There we were just doing conversion, subholding, all those kind of things. But in section 66, when you are reducing the share capital, you need to have confirmation, special resolution to be confirmed by tribunal. So company, limited company, whether it is limited by shares or by guarantee, having a share capital can reduce in the following ways. Number one is extinguishing or reducing the liability in respect of the shares not paid. So I just told you, if you had a share capital of 100 crores and now you want that the share capital shall be reduced to 80 crores, then this balance amount that you're reducing will not pay it. So say, for example, only 80 crores have been paid up, 20 crore has not been paid up. So you extinguish, liability is reduced, means it is now made in the books only 80 crores. Or you have cancelled the share capital which is lost or unrepresented. So on the equity side, you're having 100 crores of the share capital. On the asset side, you're showing 75 crores. You don't know about the balance 25 crores, where it has gone. So you cancel those paid up share capital. So that share capital will get cancelled, provided the balance representing the related to the share capital in the balance sheet is lost, or it is not having any available assets related. And pay off any excess capital. If the company has received excessive paid up share capital, and as per the requirements, whatever the requirements of the company was, it has received more share capital, then it will pay off the excess paid up capital in exchange for the bonds. All these things. So what are the three ways? Extinguishing or reducing the liability. 100 crore thi, ab humne 80 crore kar di. So the shares, now the capital will only be 80 crores. So company has reduced the price of the share only. Company can also reduce the price. For example, rupees 10 per share, now we have reduced it rupees 8 per share. So those who have not paid rupees 2, if you are lucky ones, because you have already paid rupees 8, now your liability is finished. You don't have to pay anything extra to the company. So extinguishing or reducing the liability. Second is cancelling the paid up share capital which is lost or unrepresented. Third is paying off the excess paid up share capital. How will you do it? You will pass an SR. You will alter the MOA. Why you're altering the MOA? Ma'am, you're changing the share capital number of shares accordingly, so you have to alter the MOA. Repayment. In what section does the alteration of memorandum take place? Quickly. Incorporation of company. You have learned about the alteration of memorandum. Under what section the alteration of memorandum takes place? What section will become applicable? Tell me. Section 4. Common Plead. Section 4 tells you about memorandum of association. Section 13 needs to be complied with. Very good, Abhishek. So Section 13 needs to be complied with the alteration of memorandum. Repayment of deposits either or before or the interest payable shall not be in error. Now, what is the meaning of this? Is very, very important line. Very important. You don't have money to repay your deposits. Your creditors are standing over there. You have not paid them the money and here you are reducing your share capital. You cannot do that. So same points of defaults come up in these kind of things also. You should not have defaulted in paying off your creditors the amount. So if you have, if I ask you, there is a company ABC Limited and it has the arrears for the repayment of the deposits. They have taken the deposits from outsiders and they have not repaid. Can it go for Section 66 reduction of share capital? Yes, ma'am, or no, ma'am? Can it goes for the reduction? No, ma'am, is the correct answer. Very good. Very good. Very good, Sunil, Abhishek, Kushbu, all of you, those who have answered. Well. So example number 24, in respect of the shares. Let me see. Divyanshi, you have also given the correct answer. Good. D. Archana is also here. Good. Yes. Now, if a company has called up 7 per share and the same has been paid up, company decides not to call the remaining. So lucky, na? Now I was thinking that I have to pay ₹3 per share. Company only decided not to call it and reduces its shareholders' liability. Company will have reduced the share from ₹10 to ₹7 as fully paid. Now, whatever you have paid is a fully paid. Everyone clear upon this? So first 3 points you have to remember. These are the 3 cases. And next 3 points, how will you do it? SR, altering the memorandum, no default and repayment of interest. Clear. Now, notice will be sent by the issue of notice by the tribunal. Tribunal will involve 4 important parties. Who are the 4 important parties? CG, Registrar, SEBI and creditors. They have to be taken into notice that see company is with. It is a very huge thing. Mazak nahi hai. ₹10 mein se you have done ₹7 per share fully paid up. Shareholders have not paid the fully amount. Those who have not paid, the money is not being called. So now SEBI has to be taken care of in case of listed companies. Registrar have to be taken permission. CR, CG, central government and creditors of the government. Tribunal will consider the representations made within a period of 3 months from the notice. So what is the time period? Within 3 months, the consideration has to be taken from all these parties and no objection has to be received. When no representation has been received, it will presume that no objection. So CG did not reply. The CG thought, okay, fine, it's okay if you're doing such kind of changes. So Ayushi Mehta, now if my paid up share capital will be only ₹10, so the dividend will also be considered for that ₹10, ₹8 only. Okay. Regional directors and the registrar. So who has asked this? Let me answer you. Om Krishnan Gupta. So for this, most of the powers, see, central government is now having huge responsibilities more also. They are running the administration of your country also. So that's why law has decided all those, most of the powers which were given earlier to central government have now been delegated to regional directors. So again, this power at the state level has also been given. So these are regional directors who will now be taking care of the other things which the central government was earlier taking. Okay, registrar is separate. Registrar of companies is ROC, registrar of companies. They have to be informed and regional director in place of CG has to be informed. Okay, Bacha? Considering representation is statutorily required, not admitting it in full. This is a statutory requirement. You cannot go for the reduction without taking their approval and permission. Okay. Application of reduction was received by NCLT on 22nd from unlisted company. Notice was sent to RD, ROC as well as to credit. It is sent by registered post. Hence, in the given case, they can make a representation till 28th Feb. So within 3 months time period they have to make. So this is 3 months time period when the notice has been received by them. from that date. Or, on the note, send a notice on this date. So from the date, if any representation made thereafter, tribunal will not be bound to it. So this is the date that you have to be considered. So on 1st December, Jan, Feb, 3 months have to be taken. So 28th Feb will be the date. Is that clear? The tribunal will make the order confirming the reduction. Now, what will tribunal do? Tribunal will pass the order. Okay, fine, I'm satisfied. Now I'm passing the order. What all has to be taken into consideration if he feels that the date of claim is discharged, the creditors have been discharged, has been secured, and his consent has been taken. Now, what will the tribunal pass the order? Tribunal's order will be published in the manner in which the tribunal thinks fine. So company will deliver the tribunal's order copy with the ROC. What will tribunal say? Tribunal will see the accounting treatment of the company was done fine, the accounting standards have been followed properly, and for confirming this reduction of share capital, he will be satisfied that the debt or claim of every creditor has been discharged or his consent has been taken. Means whether the creditors have been paid off or their consent or approval has been taken. It is very, very important because you're reducing the share capital, creditors' rights are being affected, their consent has to be taken. Also, he will see that the accounting treatment and accounting standards have been properly followed. His order will be published. Tribunal's order will be published for reducing the share capital. Again, 30 days of the receipt of the copy. ROC, it has to be filed with the ROC, and certain minutes will be made for the approval of the tribunal. You have taken the approval from the tribunal. So what will happen? Order of tribunal will come. First, you will go to the tribunal. Tribunal will give notice to 4 parties. Who are the 4 parties? CG in place of CG is RD, Regional Director, Registrar, ROC, creditors of the company, and SEBI in case of a listed company. All these 4 parties are satisfied within 3 months of the notice you have received the representation, or no representation has been received, which means no objection by them. Then tribunal will pass the order for the reduction of share capital. While passing the order, he will take care that the creditors have been paid off or their consent has been taken. Accounting standards by the company are being followed. Certificate of the company's auditors will also be filed with the tribunal. It's written over here. Certificate of the company's auditor shall also be filed with the tribunal. Very good. Those who have written the answers correctly. So order will be given for the tribunal's order and minutes will be made. Within 30 days, you will be filing the copy of the tribunal's order with ROC, and the minutes will be made for this tribunal's order. What all the minutes shall contain? Amount of share capital, number of shares into which it is divided. Now you have reduced your share capital from 100 crore to 80 crore. This is your share capital. How the shares will be divided, what will be the amount of each share, aggregate amount and the date of registration to be paid up on each. And after receiving all these, registrar will receive all these things and will issue a certificate with the same. Now it says nothing will apply to buyback of security. Section 68 is different. Section 66 is. Section 66 does not mean you have buyback the security. Buyback of securities is separate. Nothing in the section will apply to buyback of securities under Section 68. So Section 66 means reduction of the capital. So that means reduction of the capital does not mean buyback of security. For buyback, we have to follow the different Section 68. Then now, how much liability has to be paid off? Maximum difference between the amount deemed to have been paid and the nominal value of shares. This will be the member shall not be able to liable or call the amount paid. Deemed to have been made signify reduced amount against the amount. So whatever amount you have actually paid up will deemed to have been paid up fully. Now comes a very, very important point where the creditor's name is not entered in the list properly. See, for example, there was a creditor of the company, there was ABC Limited, and they had creditors worth rupees 10 crore. And you simply write down while you were taking the notice to the tribunal, you have written there are creditors of rupees 500. Or you forgot to give the list of creditors. Then that is not at all acceptable. How can, what kind of provisions have been made for the creditors not being taken care? It says where the name of the creditor is not given or the list of creditors is not given properly, then every member who on the date of registration will be liable to contribute an amount equal to amount that he was liable in case of the binding up of the company. So they will have to pay. It says the amount, every member shall be liable to pay the amount maximum up to the difference between the amount deemed to have been paid and the nominal value of the reduced shares. Means you have to take care of these parties. The creditor has to be taken care of. And if any kind of contribution has been done by the company, company is running its operations, every company on the date of reduction shall be liable to contribute the payment of such debt, not exceeding the amount which have been liable to contribute, and company has commenced the binding. So whatever amount they were liable to pay, they shall pay off the liability to the creditors. Remedy available to the unpaid creditor, they have to be paid up. So important mark kar lena. So you cannot say that without paying the creditors, you are reducing your share capital. If the company is running its operations, every person who was the member on the date of reduction of share capital will be liable to pay the payment of the date of the creditors. And if the company is winding up, then the tribunal, on the application made and the proof of ignorance, settle a list of creditors liable to contribute and make and enforce the orders of the contributor. Then he will make a list of contributors, how this creditors of the company have to be paid. Is that fine? These examples, you can just read it out once. Liability of officers. And if you are knowingly concealing the name of any creditor, very important, or you are misrepresenting, trying to abate or privacy of any misrepresentation, simply your liability under 447 will be liable because you're trying to do fraud. One side, you're reducing the share capital of the company following section 68, but when the notice was given to the tribunal for taking the approval from the creditors, you have given a wrong list of creditors. So tribunal might think that, okay, only rupees 500 creditors, I don't need to send any approval or notice, let leave it. But actually the creditors were 1 crore. So that means you have concealed the name of the creditors. You have misrepresented the amount of debt. Then you have committed a fraud under 447. 447 we have already done in chapter 7. Abate means to encourage another to commit a crime. You're encouraging the people to commit a crime, and private means one has interest, so co-participant. Privity of contract, you remember, if I am being affected, if a lien map and Shoaib has made a contract that I'm going to sell you the goods, I'm going to pay the money. So privity of contract is between a lien map and Shoaib. So that is privity, misrepresentation. Is that clear, children? Khushbu, abate means you're trying to commit any crime. So you're forcing, encouraging another person to commit a crime that okay, fine, हमने उसको पैसा देना था और अब हम उसका नाम नहीं डालेंगे तो हम क्राइम कमिट करें ना. किसी के पैसे आप चुरा नहीं रहे हो, बट आप गलत रिप्रेजेंटेशन. ओके, ऑलराइट. What does section 67 tells you to do? Section 66 is now clear. Reduction of share capital is very important. Remember their liabilities also. Section 61 and section 66 are the same, both of them. Quickly tell me. Section 61 is alteration. Section 66 is reduction. There is a difference between both of them. Now, do you remember there was no approval of tribunal? Here you have to take approval of tribunal. Liability under 447 is involved. Creditors cannot be cheated. Now talking about section 67. Section 67 says restrictions on purchase by company or giving loans by it for purchase of its shares. So there is a company ABC Limited and it is giving loan to the people that please go and buy my shares. So section 67 strictly says that there is a restriction. Company cannot give guarantee or provide money, cannot give loans so that people can take the shares in their company or in its holding. So no company limited by shares or guarantee having a share capital can buy its own shares unless the consequent of reduction of share capital is effective. So you cannot buy your own shares of the company. You cannot help people buying your own shares of the company. Buyback of security, section 68 is different. They have different rules and regulations, which we're going to understand. Here it is saying that public company will not give loan, guarantee or security or any kind of financial assistance to the people for purchasing the shares of their company or holding. But there are 3 cases in which exceptions have been given. Number 1, lending of money by a banking company in the ordinary course of business. So banking company का तो काम ही है ना loan grant करना. So banking company is given an exemption under this. Lending of money by a banking company in the ordinary course of business, they can give money for allowing the people to buy the shares. Where provision of money for the purchase of fully paid shares in the company or its holding by trustees on behalf of company's employees according to employee share scheme has been waived and SR has been passed. So what are the 2 points you have to remember over here? Where the company is providing under any scheme, under employee share scheme, they are giving money to the company's employees that, okay, fine, you can take the shares in a company and SR has been passed, then it is a. Number 1, public company cannot give loan, security or any financial assistance for purchasing shares or its holding company's shares. There are 3 exceptions. Banking company in the ordinary course of business can do that. Number two, any company which is giving the money under employee share scheme approved by the companies through SR, they can give money for this purpose. Number three, lending money by a company to its employees other than directors or the key managerial personnel. Who are the key managerial personnel? Do you remember who are the key managerial personnel? People, very important people, CS, CFO, CEO, MD, manager, all those people that you have done. So those are excluded. They are not considered over here. And you are lending the money via company to its employees, not exceeding 6 months of the salary of the employees, to give them the chance to buy the shares of the company or holding company and to hold them by way of beneficial. Now listen carefully. There is an employee of my company. Either I am giving them the money for buying the shares under employee share scheme, or third point is there is an employee of my company whom, if it is a KMP, then it is not allowed. If it is director, then it is not allowed. So other than directors or KMP, any employee of my company, if I say his salary is 1,000 per month, so 6 months salary is 6,000. So around 6,000 amount can be given so that they can buy the shares in a company or holding company and they are becoming the beneficial ownership. Is that clear? So restrictions under section 67 says what will happen to the contraventions. If company contravenes, 1 lakh up to 25 lakh fine will be charged, and for officer in default, 1 lakh to rupees 25 lakhs and imprisonment of 3 years will also happen if companies try to commit any kind of fraud. 3 exceptions याद करनी है इसमें, heading याद करनी है, punishment and penalty has been. Good, Yamin. I'm glad you're clear. Okay, now rule 16. It says in case the shares of the company are listed, then such purchase of the shares shall be made on the recognized stock exchange. So recognized stock exchange per the purchase of the shares will be happening. And if you're not registered, then how the valuation has to be done? By the registered. Very simple. But the value of the shares to be purchased shall not be 5% of the aggregate, shall not be more than 5%. So if the aggregate value of the shares is aggregate paid up capital and free reserves is 100, then it shall not be more than 5. So value of the shares purchased, only 5% of the aggregate paid up and free reserves के लिए arrangement हो सकता है, not beyond. Disclosure in respect of voting rights not exercised directly in respect of the shares to which these schemes are made in the board's report. So it says you have to make certain kind of exposures. So loan can be given to the employees other than directors and KMP, we have just read, for the amount not exceeding 6 months of the salary, and it should be to purchase fully paid up shares. But how much is the amount given that they can value of the shares that can be purchased? It shall not exceed more than 5% of the aggregate value of these shares. Voting rights shall not be exercised directly. Means that you cannot directly exercise the voting rights, and all these details, name of the employees who have not exercised, the reasons for not voting, and the name of the person who is not exercising, who is exercising such voting rights, all these details have to be given in the board's report. Number of shares taken up, date of general meeting, resolutions that has been passed, percentage of the votes were cast in favor. All these things have to be given. Also, section 67 is not applicable to the private companies and specified IFSC public companies. All those companies for which section 67, that means section 67 means where the loan has been given to the employees for buying the shares of their own company or holding company. This is not applicable to private companies who has filed their financial statements and annual return, and the IFSC public company in whose share capital no other body corporate has invested in. So these are the exceptions which have been given. If the borrowings of the banks or financial is less than twice the amount of paid up share capital of 50 crore. Okay. So these are the limits that you have to remember, and it will not apply to Nidhi companies where the shares have been purchased by the members on ceasing to pay deposit. So you were a member earlier, now you ceases to pay deposit. Depositor means that the shares were in demat form. Now the shares are being purchased by the company's member. This provision is not applicable to Nidhi companies. Is that clear, children? Section 67 also we have done. Now your two important sections which are left are section 68, 69, 70 and 71. The important out of them is section 68 and 72. All right. Let me see if there is any question under section 67 in the book so that we can just go through that question also. So all these points we have discussed from the notes. You can refer my notes for this so that it becomes easy for you to learn. So now there is no question has been given. And let me see if certain MCQs we can do. All these MCQs you should be doing, children. Duplicate share certificate, section 67. Okay. So we have an MCQ for you for section 67, which I really wanted to do. Section 67 imposes a restriction on public company from giving any financial assistance. So we have just done that there is a restriction on the public company. No financial assistance can be given, whether by way of loans or guarantees, for purchasing the shares of any shares in the company or holding them. There is a company Star Engineering Limited, which is not covered by any of the exemptions and it contravenes the restrictive provisions. So every officer in default shall be liable for the fine. So they have simply given you the provisions related to fine. So we have just done fine minimum 1 lakh, maximum 25 lakhs, and imprisonment of 3 years of both will happen. So B will be the correct answer in this case. A fine shall not be less than 1 lakhs, 25 lakhs, and imprisonment, which makes 10 to 3 years. So I think both provision was not there. So what is the correct answer for this one? You have to tell me. Yes, D will be the correct answer. Yes, that's absolutely correct because the provision for both is not there. So well done. Komalpreet, not B, it will be D. Abhijit is correct. Om Krishnam is correct because the provision of the word or both is not there if you'll refer to section. So it is only fine which is not less than 1 lakh to 25 lakhs and imprisonment for 3 years. Okay. Here it is writing the choice or this or this or. So that is the only hint that you have to form. So again, if you have learned the penalties by heart, then only you will be able to answer such kind of questions. All right. Buyback of securities. What is the meaning of buyback of securities? Now the company is planning to buy its own securities back. So how the company can do that? Company has the power to purchase its own shares or other specified securities. Specified securities include ESOPs or the securities notified by central. So companies has issued ESOPs. Under ESOPs, I wanted to tell you one another important point that there should be a gap of 1 year when these ESOPs are granted and they're vested with the employees. And if we are retiring or leaving the company or ESOPs get cancelled, or even if the person has died, then the legal year will, the ESOPs will get vested to the legal. So under ESOPs, detailed rules can be done, but you simply have to remember the information which is given under section 62, your rights issue and ESOPs that we have. Now, buyback of securities, company can do buyback of shares. It can buy its own ESOPs also and other securities which CG has notified. Now, again, the sources of fund. The way we did sources of fund for bonus shares, again, the company from out of which things the company can buy back its shares out of free resource, security premium account, and proceeds of fresh issue. What was the sources of funds for issuing fully paid bonus shares? Come on, tell me. Under section 63, we have just done today. What was the sources of funds for fully paid bonus shares? Two are already written on the screen, and third is the one thing which is only used for bonus shares. So that is very, very easy. Excellent. All of you have given correctly. CRR, SPR, and FR, that is free reserve. Very, very, very. For buyback, what we are going to use? Free reserve, security premium, and proceeds of any fresh issue. You can issue fresh issue of shares also to buy back your security. But can you issue the proceeds of different kind? It says buyback or other securities cannot be made out of the proceeds of earlier issued shares of securities of same kind. So you cannot issue equity shares for buying back the equity shares only. You have to issue either preference or debentures if you're trying to buy back the equity shares. Okay, you cannot issue the same kind of securities for doing the buyback of same security. What are the conditions for buyback? Number one, same condition, articles authorization. Number two, SR needs to be passed. So in most of the cases, there is SR. You can specifically write down on the beginning of the chapter where OR is required. Otherwise, all the cases, most of the cases that we have done in this 2 days, it is special resolution. But when special resolution is not required, the special resolution is not required if buyback is not exceeding 10% of the equity capital plus the free reserve. So what is the maximum limit that we have set up? Number one, it says articles authorization and SR in general meeting is required. But it says if the limit is 10% of the total paid up equity capital. Children, please make sure I've underlined equity capital, means equity base. So there is a paid up share capital, 10 crore equity, 10 crore preference. So what will you take? 20 crore or 10 crore? So you will take 10 crore, only the paid up equity capital plus the free reserves of the company. Uska 10% se zyada nahi ho sakta buy. And if it is within this limit of 10%, then do you need to pass SR? No, ma'am. Then we'll only pass board resolution at the board. So my question to the class is, if the equity share capital is 10 crore, preference share capital is 15 crore, and the free reserves are 5 crore. So the total is 10, 15, 5. It becomes 30 crores. For seeing the limit of 10% for the maximum limit, what all needs to be considered? 10 crore equity capital plus 5 crores free reserves. So 15 ka 10%, 1.5 will be considered for the 5. Very good. Excellent. And then board resolution, and if it is 1.5 crore only, then will you pass SR or BR? Then we will pass only board resolution. Okay? Clear ho gaya? What is the maximum amount? But the buyback should not be more than 25% of the paid up capital and free reserves. It says, okay, 10% limit का तो ये है कि अगर आपको BR पास करना है ऐसा 10% limit है, आप सबने you have answered it correctly, ma'am. BR will be passed. Very good. I shake everyone. And if it is beyond that, SR will be passed. Now, what is the maximum limit? What is the maximum limit for equity share capital? How much buyback you can do? 25% of the aggregate paid up. Now here what will you add? 10 crore equity, 15 crore preference, 25 plus 5 crore free reserves. So up 30%, 30 crore ka 25%. Buyback should not be more than aggregate of the paid up capital. Paid up includes equity as well as preference and the free reserves. So the maximum limit is 25% of the total paid up equity capital in any financial year. So the maximum shall not be more than total paid up equity share capital of and the free reserve. In case of buyback of equity shares, maximum limit is 25% of the total paid up. And otherwise, if you're talking about the total buyback, then it shall not be more than 25% of the paid up capital and free reserves. Very good. And what shall be the debt equity ratio? The debt equity ratio should not be more than 2, means the debt secured as well as unsecured divided by paid up share capital plus free reserves. What is the word used over here? Paid up equity or paid up share capital? Come on, tell me. For calculating the debt equity ratio, the denominator that you're going to take up will be the paid up equity capital or paid up capital. Very good, very good. Excellent. So you all know that it is paid up share capital only. It's not just equity. Paid up share capital means equity and preference both have to be written for the debt equity ratio. So it shall not be more than 2, and the shares shall be fully paid up. This provision was there in bonus shares also. For issuing bonus shares also, the shares shall be fully paid up. For buyback also, the shares shall be fully paid. In case of listed shares, what has to be followed? SEBI regulations have to be followed, and if the shares are not listed, then Companies Act and rules have to be taken care of. Good, Rishabh Gupta. All of you have given the correct answers. Now, buyback cannot be done again for 1 year. What is the time period? Buyback should not be made within 1 year. So once you have done the buyback of securities, that means you have become so rich, you're buying your own securities. Now you cannot do it again at least for 1 year from the date of the proceeding. So what is the time gap, the period that you have to consider? Buyback cannot be done again for 1 year time period. And the notice which is sent for the special resolution shall specify all the details in which the buyback's approval has to be taken. The complete disclosure of all the material facts have to be given. Necessity for the buyback. Very important to give the necessity statement. Why we are going to do this? why the company is coming for this buyback. That is very, very important to be informed. Okay, the time period for the completion of buyback, when the buyback will be completed, the amount to be invested, and the class of the shares to be purchased under buyback. Within 12 months, what is the time for completing the buyback procedure? Within 12 months of passing the special resolution or board resolution, the buyback should be complete. So if it is within the 10% limit, then board resolution was passed. If it is beyond that, SR was passed. But the maximum shall not exceed 25% of the paid up and free reserves. But if it is only equity capital which is doing buyback, then it is 25% of the equity capital and free reserves. Debt ratio should not be more than 2, and within 12 months of passing this SR or board resolution, the buyback shall take place. The buyback can be from the existing shareholders on proportionate basis, or you can do it from the open market. Material fact, Abhijit, material facts means all the relevant information related to the company has to be disclosed. Now you are doing a buyback of securities, you are planning to do that, so you have to take a special resolution. Majority of, more than majority, 75% of the shareholders have to say consent for this. So the notice will give clear fact of all material things. Material things mean something which is very important and relevant for understanding. Necessity fact has to be given. Why there is a need of this buyback? You cannot simply say that mera dil kar raha hai company ka ki buyback hai. You have to give certain reasons, and it should be a valid reason. Shareholders' consent has to be taken, their approval has to be taken. So you have to state all the important facts why there is need for the company for doing this buyback. And all the financial positions, every fact of the company has to be disclosed. Is that clear? So securities can be buyback from the existing shareholders or from the open market, or the securities issued to the employees, that is on the basis of ESOPs or even swear declarations. Now, declaration of solvency. What is the meaning of declaration of solvency? Company has to tell that I'm not insolvent. I'm still a solvent person, has to be given the form number FH9, has to be filed with the registrar and also with SEBI. So when you are coming up with the buyback of securities, you're planning to buy your own securities. So you have to give a declaration of solvency. It has to be filed with the registrar as well as with SEBI. And this has to be given in form number SH9. Who all shall sign this? It shall be verified by an affidavit stating that the board of directors have made a full inquiry into the affairs and have found that the company is capable of meeting its liabilities. What is the meaning of solvency? Children, I've asked you. What is the meaning of solvency? Means I am still a solvent company. Company has the capacity to pay off its liabilities. And it will not be rendered insolvent within 1 year. ये नहीं कि company insolvent होने वाली है and आप buyback करो. Then it is not allowed. For at least 1 year, company will not be declared insolvent from the date of declaration. So company should have the capabilities of paying off the liabilities. Then only the buyback will be done. And by 2 directors, one of them shall be managing director, shall sign this declaration of solvency. What will happen on the buyback of securities? Company will extinguish and physically destroy the shares bought back within 7 days of the last year of completion. So if I've completed the buyback on 7th January, so by 14th January, within 7 days, I have to destroy all the shares which have been bought. And what is the cooling period? The company has just done the buyback. Now for 6 months, company cannot go for the issue of shares. You cannot again start asking money from the market that, okay, fine, we need more money for the expansion. We are coming up with the issue of the shares. You have just done the buyback. You cannot go out for the issuing these shares in the to the public. So what is the cooling period? 6 months ke liye nahi ja sakti. So how do you have to learn these time period? For 1 year, the buyback cannot be done. Within 12 months, the buyback shall be completed. Within 7 days, company will physically destroy the shares which have been bought back. And within 7 months, company cannot do fresh issue of shares and cannot go for the next buyback for next month. So what are the provisions? 7 days, 6 months, and 1. All right. Register of buyback has to be maintained. What does the register of buyback tells you? The register will have the details about the securities which have been bought back by the company, the consideration that the company has paid, cancelling of the shares, extinguishing and physical destroying, whether in the 7 days we have destroyed the shares or not, and any other particulars as may be prescribed. Filing of return of buyback. A return of buyback along with the fees has to be filed with the registrar and also SEBI, containing such particulars within 30 days. So you have to file a return of the buyback. A return will be made that buyback has been properly done by the company. And this return has to be filed with the registrar and also with the SEBI. containing all the details, and within how many days the return has to be filed? Quickly tell me, children. Within how many days the company shall file a return of buyback? Within 30 days, it has to be filed with the registrar and ROC and SIP. And what will you file? A form number SS15 signed by 2 directors. One of them is managing director, that the buyback has been done as per the provisions. Any penalty for doing any default, 1 lakh up till 3 lakh rupees for officer in default, and company will be liable. And who will be signing the form SS15? By 2 directors. One of them shall be managing director, saying that the BB has been done in compliance. And declaration of solvency shall be signed by whom? Declaration of solvency shall also be signed by these 2 directors. One MD is mandatory. Is that clear, children? So within how many days the buyback should be physically destroy the securities which have been bought back? Answer me. Within how many days you need to destroy the 30 days, Khushbu Verma? Yamini 7, Ayushi 7, very good. Very good, Abhishek saying, Komal, Kushi, very nice. Within 7 days, it has to be physically destroyed. It's okay. Within how many time period you cannot issue fresh proceeds of the securities once the buyback has been done? 6 months. Very correct answer. Very nice. 1 year, not 1 year. You cannot go for buyback for 1 year. You cannot go for the proceeds of fresh issue is 6 months. Okay. Is that clear? So let's quickly do section 69 and 70, and then we will be moving towards the last leg of this chapter. No such limit for differential issues. Abhijit, what are you asking? Differential issues. So proceeds of the fresh issue, 6 months. That is the only time period limit that they have. Now, transferring of securities to CRR, company purchases its own shares out of free reserves of security premium and a sum. Now, whenever you're doing a buyback, whenever you're purchasing your own securities out of free reserves of security, not from the fresh proceeds. So you can do it from the free reserve securities or fresh proceeds. It is talking only of these 2 things. When you have done the buyback from the free reserves or from the security premium account, then a sum equal to the nominal value of the shares you purchased will be transferred to the CRR, and this will also be disclosed in the balance sheet. And what will the CRR be used? CRR will be used for paying the fully paid bonus shares. So company does buyback from the proceeds of fresh issue of shares. How much amount that the company needs to transfer to the CRR? Please answer me. A company, yes. For the, it is only for the same kind of securities. Abhijit, that's correct. Shoaib, 25% of the total paid up capital. Yes, you have to include both equity as well as preference. But if it is only for the equity buyback, then you have to include the equity share capital. Okay, Shoaib, your question that you have asked me. So buyback is maximum is 25%. And if it is buyback of equity shares only, then it is 25% of the equity capital and freeze. Okay. Yes, I've asked you a question, children. I will repeat my question because there was some certain query in between. So if I have company has done the buyback from the proceeds of the issue of fresh shares, how much amount needs to be transferred to the capital redemption reserve under section 69? Devyani Garg is saying nominal amount. Okay. Very good. That's wrong answer. Komalpreet has given the correct answer. Vijit has given the correct answer. And who else has given? Abhishek Singh, correct answer. No need to transfer CRR if we are doing the buyback from the fresh proceeds. Okay, so the answer is nothing needs to be transferred because CRR is done only when the company buys the buyback from the free reserves or security premium. Now, there are prohibitions on buyback in certain circumstances. So what are the prohibitions? We are going to talk about section 70 now. Certain prohibitions have been given. The company cannot buy back its securities in the following cases. Number 1, company cannot buy back the securities through any of its subsidiaries, including its own subsidiaries, or from any investment companies. If any default is made in the repayment of deposits, I told you are not repaying the deposits, you are not making the redemption of preference shares on time, you are not repaying the term loans or interest, then you cannot go for the buyback of securities. So following cases, the company cannot go into buyback of securities. Number one, through its subsidiary or holding companies, through its investment companies. If there is any default in the redemption of shares, redemption of debentures or preference shares, any term loan has not been paid, and if this default is remedied and a period of 3 years has lapsed, then buyback is not good. That means if a company made a default and within a period of 3 years have passed out of the default, then after those 3 years time period, company can think of doing the buyback of security. And no company shall directly or indirectly purchase its securities if it has not complied with provisions of 92, 123, 127, and 1 for filing of the financial statements, annual return, all the provisions that are given in the chapter of management and administration. No default shall be made by the company in complying with the provisions of these sections. So children, I hope this is now clear to all of you. Buyback of securities is very, very important. You must do it carefully. You must learn each and every provisions related to the buyback, and fully paid shares was very, very easy. I hope no doubts in that. Now we are just left with the debentures. Let me just see in the study material if there are any important points to be taken up. Yes, buyback is also there in accounts. That's absolutely right. This is basically your accounts chapters in the share capital and division debentures. When I started with you revising, I told you that it will remind you most of the things that you do in your accounts. So SH9 was filed by listed company Rainbow Sports Limited with SEBI, stating that they have made full inquiry and found that it is capable of meeting its liabilities and will not be rendered insolvent for a period of 6 months. Declaration was signed by 3 directors. None of them was MD. MD is out of country to see the FIFA World Cup match. Okay, my God. There are 2 lacuna in a compliance. Now, 2 faults have been done. One is the declaration has been made for a period of 12 months. So it says for a period of 6 months. What have I told you? That the declaration has to be given that for 12 months I should not be becoming insolvent. And the second is MD has to sign. So these kind of questions. See children, example number 26, study has beautifully explained you the point of declaration of solvency. They are giving you a hint that what kind of questions can come in the exam. 2 directors have to sign. Okay, they are saying 3 directors. One of them have to be MD. You're saying MD has not signed. It is not possible. Okay, na? So 2 lacuna in compliance means that means you have not complied with the subsection. You don't remember subsection in the exam, it's absolutely fine. You're remembering the section, that is also a big thing. But you have to remember the provisions. And how does it happen? When you keep revising them again and again, when you keep answering the teachers these kind of questions in between, apne aap ho jata. And what is the first thing? That the declaration had to be given for 12 months. Cooling period 6 months also we have done. Ordinary resolution is sufficient for the buyback, not exceeding 10% of the paid up capital. Tell me, children, if the buyback of securities that I'm doing is within the limit of 10% of the paid up share capital and free reserves, can I just pass ordinary resolution instead of special resolution? Yes or no? Very good, Om. Om is correct. Komalpreet correct. Here, not ordinary resolution, board resolution is required. So this is the only point buyback of securities where we have specifically talked about board resolution. Within the 10% of limit board resolution, beyond that SR is required. And the maximum limit is 25% of the paid up capital and free reserves. Okay, children, now revise your chapter till section 70. Go through, find, see if you know everything. And then we just take a small break here because now a very small topic of debentures is left. So I don't want you to miss out anything on debentures. So let's take a small break and then we proceed towards the last topic of debentures. Students, I plan to do one exam question with all of you before we move towards debentures because it is little important. So this question number 7 in front of you on the screen. OLF Limited, a subsidiary of PQR Limited, decides to give a loan of 4 lakh to its human resource manager, Mr. Surya Nyam, who does not fall in the category of KMP and draws a salary of 40,000 per month to buy 500 partly paid up shares of 1,000 each. Now, first of all, you have to tell me what section is it talking about. So, ma'am will be taking up with you the sections that I have just revised with you, right? So, what do you think out of which of the sections it has been taken? It is about the, yes, I'm waiting for your answers. What section is this topic talking about? Can we issue the shares? We are giving loan, and then what kind of this thing? Is there any prohibition on giving the loan or securities for buying? Very good, excellent. It is talking about section 67, restrictions on the. So this kind of question when comes in the exam, first you have to relate what is the section, what is the topic it is talking about. So there is general restriction on giving the loan up to the employees for buying its own shares. But we just did section 67. There are certain exemptions where you're giving the money to the employees and the employee share scheme, or if it is buying the shares not exceeding the salary of more than 6 months of the salary. So we have to see what is the category and drawing the salary, this much amount they're allowing him to buy 500 partly shade up of rupees 1,000 each. So let us understand how we have to write the answer to this kind of questions. Quickly read the answer and then we move forward. So first you will give the definition of what is section 67, how it has to be done. Very good. Maximum 2,40,000 can be allowed. That is absolutely correct. So first you will give the definition. Now this is just the 5th point which is given over there. He shall not be a director. So is he a director? No, he's not a key managerial personnel also. Amount shall not exceed the 6 months. The loan shall be for subscribing fully paid up shares, not for the partly paid up shares. Okay. So here, then you will write the facts of the case. Mr. Surya Nayan is not KMP, so that is fine. He's falling under. He's drawing a salary of 40,000 to waive the loan for this much shares. So keeping in fact the decision in granting a loan of rupees 4 lakh for purchase of partly shares is invalid. Why? Because 6 months salary is 2,40,000. How much loan he is giving him? He is giving him a loan of 4 lakh. So maximum that can be given is 2,40,000, and which is equivalent to a 6 month salary. And also the loan has to be given to is meant for purchase of partly paid up shares. You have to give the loan for purchasing fully paid up shares. So that is why it is not valid. So first criteria is being met. KMP is not KMP, is not director, that is met, but the other 2 criteria are not being met. So that is about the nitty-gritty of each question that you have to understand and write it down. So all the descriptive questions given in the module itself are very, very important to be solved by you by writing in your own hands, so that the writing practice is also very well. Okay, now let's move to debentures. What is a debenture, children? Debenture is a kind of a long-term borrowing which is taken by a company, and the company promises to redeem them and promises to pay the interest on debentures. Like the shares, we go to the company public and with the shares in the company, dividend is given. On debentures, we pay an interest. So it is a type of loan which is taken by the company from outsiders, and company is going to repay this loan. Redemption of debentures is going to happen. So definition of debenture, it is a debenture stock. It includes bond, any other instrument which is evidencing a debt, means udhar. Udhar pe jo paisa liya, debt hona chahiye. Whether constituting a charge or not, whether it is a secured or unsecured debenture, it should be constituting, evidencing a debt. And what all is excluded? So first part of debenture is definition. Examiner can ask you what is the definition under section 2, clause 30, definition of debenture has been given. 2 things are excluded from the definition of debenture. Number 1, chapter 3D of the RBI instruments, all that has been given, and any other instruments as specified by CG, that is central. So all the RBI instruments given under clause 3D of RBI Act, and CG will specify all the instruments, those are excluded from the definition of debenture. Section 71 says CRSR has to be passed whenever the company has to give the option of converting the debentures. I told you, but if the limit is between 180 subsection 1 Clause C. So we will be discussing that limit also. So SR needs to be passed for converting the debentures with an option to convert the debentures into share. SR needs to be passed. No voting rights are given to the debentures. Does the debentures have voting rights? No, ma'am. Debentures have no voting rights. Secured debentures are issued as per the terms and conditions. Secured means you're giving them security in return of that, and the charge that is created shall be equivalent to the amount of the debentures that you have taken along with the interest to be paid. Maximum time period. So you remember preference shares? Preference shares are also issued for a maximum time period of, what is the tenure for preference shares maximum time period? Tell me. Is it 10 years, 20 years, or 30 years? The question to all of you. Preference shares are issued with a tenure of 20 years. Excellent. All of you have given the correct answer. Very good. Let me see the answers at the portal also. Very good. All of you are giving the correct answers over here also. Nice. So 20 to 30 years, but 30 years happens only in case of certain exceptions that we have done over there for infrastructure companies which have come up with startup for 30 years, but 10% of the debentures preference shares have to be redeemed starting from every 21st. So very good. You all remember for preference shares. Now let's discuss about debentures. Maximum time period for debentures is 10 years, but in the following cases, the tenure can be 30 years. So preference shares में 20 years tha and 30 years for infrastructure, and here 10 years and maximum 30 years for companies again which are engaged in infrastructure projects, infrastructure finance company, infrastructure debt fund, NBFCs, and companies which have been permitted by Department of Central Government or Ministry or National Housing or any other statutory to issue debentures exceeding 10 years. So this again something that you have to learn. These are the 4 categories which can issue the debentures for maximum 30 years period. Otherwise, the debentures are issued for 10 years. All the infrastructure related companies, jet finance companies can issue the debentures exceeding 30 years. Very good, Ayushi Mehta. That's absolutely correct. Clear? Now, whenever debentures are issued, debenture trustee is appointed by the company on the basis of issue of prospectus or letter of offer for subscription of debentures. So before issuing the prospectus or letter of offer, a debenture trustee has to be appointed. A security has to be created as a charge or mortgage in favor of debenture trustee, and that amount shall be equivalent to the amount which is due to be paid on the debentures and interest. So if there is a house which is a value of rupees 10 crore and the debentures are up to the value of 10 crore, then that will not match because the interest amount should also be taken into consideration. So whatever security the company is providing for taking a secured debenture, charge which is being created has to be taken care about the amount of the repayment of debentures and the interest. SH12 form shall be executed to protect the interest of debenture holders within 3 months. So debenture trust deed is created so that we are trying to protect the interest of the debenture holders. So debenture trustee is formed, he is appointed, and also the debenture trustee is created. Another provision is company will create DRR out of the profits available for the payment of dividend. DRR can be used only and only for the redemption of debentures. Like CRR is used only and only for the purpose of, yes, correct, fully paid bonus shares. DRR is the debenture redemption reserve. It is created out of the profits of the company and it is used only for the repayment of debentures, that is the redemption of debentures. So this is the requirement of debenture redemption reserve. It is mandatory to create a debenture redemption reserve. All India financial institutions which are regulated by RBI, banking, listed companies are not required to create DRR. For unlisted companies, amount equal to 10% of outstanding debentures. So what you have to remember, leave the listed, unlisted, any other companies. So banking, financial institutions, they are not required to create DRR. But for any other companies, 10% of the amount outstanding, a DRR has to be created. So if the outstanding debentures is 5 crore, so how much DRR will be created? 10% of 5 crore DRR has to be created. Methods of investment of deposits maturing during fiscal company has raised debentures. So during the year, if the debentures are becoming due for maturing repayment, then all and before 30th April each year, company shall invest an amount equivalent to 15% of the debentures maturing during the financial year ending 31st March in all these kind of investments. What is the provision? Amount. First, 10% of the outstanding debentures have to be credited in DRR. And now this DRR is used amount investment for the method of investing or deposits for the debentures. Whatever amount that you have reserved shall be used for further investments. So on or before 30th April of each year, the debentures issued by the company, amount shall be invested. What is the amount to be invested? Shall be 15% of the debentures maturing. So whatever debentures are going to mature in this year, that is ending 31st March, uska 15% shall be invested in deposits with scheduled bank, unencumbered securities, as per Indian Trust Act, as per CG and other companies. So in all these companies, the amount which have to be invested that has been taken is 15% of the amount of debentures which are maturing. But you have to remember that the amount maturing should not fall below 15% of the amount. So amount which has been deposited shall not be at any time below 15% of the amount maturing. So both the provisions have to be taken care of. One is 15% of the amount has to be invested, and whatever you're redeeming the debentures, minimum 15% has to be maintained in that kind of investment. ठीक है ना, amount invested shall not fall below means the amount invested shall always a minimum balance of 15% of the amount maturing has to be maintained. Restrictions on the issue of prospectus. Prior to issuing prospectus, an offer or invitation to public or members exceeding 500 for the subscription, the company shall appoint one or more trustees. So if you're exceeding 500 for the debenture subscriptions, whenever you are issuing a prospectus, before issuing the prospectus, a debenture trustee has to be appointed. However, in case of public company, in all other cases, appointment and removal of debenture trustee has to be done. In private company, it is saying if it is more than 500, then only the debenture trustee is appointed. And in case of a public company, it has to appoint the debenture trustee in each and every case. All right, children. So what happens in case of debenture trustee? Let us understand the provisions of debenture trustee. Now, who all can be appointed as the debenture trustee? Number one, name of the debenture trustee will be stated in the offer letter and the subsequent changes there. So whatever person has been requested, it has his name as to be appointed as a debenture trustee. His name will be included in the offer letters that we're sending for the debenture subscription. Written consent has to be taken that the people who will be appointed as debenture trustee will be obtained, which will appear in the letter of offer. Now, following is the category. Again, when you go to the chapters of deposit, you will be learning about deposit trustees. Similar kind of provisions are there in deposit trustee also. Similar kind of provisions you have to do in debenture trustee. So, name of the debenture trustee has to be maintained. Written consent has to be taken. 2 points. Following are the people. Now, 6 to 7 kind of people we are going to do, which cannot be appointed as debenture trustee. If you are the beneficial holder of shares, means you are the shareholder of the company, can you be appointed as the debenture trustee? Yes or no? Jaldi answer karte ho. Because it's a revision, you have to learn it. You are the shareholder of my company. Can you be appointed as the debenture trustee? No is the correct answer. Can a promoter, director, or KMP of my company or holding and subsidiary company, can he be appointed as the debenture trustee? Very good. Excellent. All the students are giving the correct answer. And can the relative of this person can be appointed? So who all cannot be appointed as debenture trustee? Number one, he cannot be the shareholder, beneficial owner in my company. He cannot be the promoter, director, or key managerial person, and neither his relative can be appointed as a debenture trustee. Basically, you should not have any relation with the company if you're being appointed as the debenture trustee. Beneficiaries entitled to monies which are to be paid by the company. So company has to pay certain money to. Then also you cannot be the debenture trustee except the remuneration payable to the debenture trustee. Now, this is very interesting point. You have appointed a debenture trustee. Obviously, what is the meaning of remuneration? Paying a salary to him. You're definitely going to pay him a salary. So, can you say that if you're paying salary to debenture trustee, then he cannot be appointed? No, ma'am. But he should not be entitled to any other money. So, he should not be getting dividend on the shares from me. He should not be getting any other kind of money by the company. But remuneration can be. He should not be indebted to the company holding or its subsidiaries of such company. Indebted means he should not have given certain kind of loans to such kind of company. Company shall not be paying any kind of money to. Neither that person should have given any guarantee in respect of the principal debts. So if there is a secured debenture and guarantee is given that, okay, fine, money should be given to this person, or guarantee is given to the company that this company is a very nice company and it will repay the money. So this kind of guarantees shall not be given by this debenture trustee. He shall not have any pecuniary relationship with the company. What is the meaning of pecuniary relationship? Relationship related to money. He should not be monetary related with the company. How much? 2% of the gross turnover or total income, or 50 lakhs or higher amount during the immediately preceding financial year. So this is a limit that you have to learn, children. कितना नहीं होना चाहिए, 2% of gross turnover or total income, or 50 lakhs or higher amount as may be prescribed for the preceding 2 years. For preceding 2 years, he should not have any monetary relationship with the company related to this kind of thing. And now debenture trustee may be removed from the office before his term. It shall be approved by the holders not less than 3/4 in the value. This is very interesting. There is a debenture trustee who has been appointed. He is taking care of all the interests of the debenture holders. Now the company is planning to remove him before, say for example, he was appointed for 3 years. Now you're removing him before the expiry of his term. Then 3/4 of the consent of the debenture holders has to be taken. Maybe they're very satisfied with him. They don't want this debenture trustee to be removed. So the consent of the debenture holders have to be taken. How many consent? At least 3/4 of the value of debenture holders shall give their consent if debenture trustee needs to be removed. And if there is a casual vacancy of debenture trustee, he is leaving the firm, then board will fill the casual vacancy in the office of trust. And in case of resignation, written consent of the majority of the debenture holders. He is resigning, then you have to take a written consent of the majority of debenture holders. Debenture trustee will take all the steps to protect the interest of debenture holders and will readdress their grievances. Whatever problems they have, whether their money is being paid on time, security has been given, everything, all these steps, grievances will be taken care by the debenture trust. And meeting of debenture holders can be held a meeting like you have been holding the meeting of shareholders. Similarly, debenture holders meetings can also be held. You will receive a written request from the debenture holders at least 1/10 of the value of debentures. So when will you hold? If you have received 1/10 of the value of debentures, have given their consent in writing for holding the debenture meetings, or any event which is happening which is amounting to breach or default, then at the option of the debenture trustees, suo motu also they can hold the meeting of debenture holders. So my question to my class is, what is the time limit or what is the criteria for holding the meeting of debenture holders? When can you hold the meeting of debenture holders? Before I'm opening the study for you, we still have 10 minutes. How many debenture holders should have consented on the requisition of how many debenture holders? 1/10 or 1/12, 1/20th, how many? Very good. 1/10 of the debenture holders have requested, then you can hold the meeting for the debenture holders. Can we hold the meeting of debenture holders suo motu? Yes, ma'am. Suo motu also we can hold if there is any breach of rights related to the debenture holders. So I wanted to show you the debentures from the study also. Buyback अच्छे से पढ़ लेना, सारी provisions, everything. Section 67 should be done very nicely, children. Definition you will do. It is the smallest unit. Features of debentures you can read. Example 29 is very, very simple. It is giving you certain provisions. You can just read it down. Secured, convertible, redeemable debentures can be there. You have an option to convert them. If it is a convertible, then SR should be passed at the time of issue of such debentures. They don't have any voting rights. Then you have to remember 30 years के लिए कौन सी infrastructure companies है, trustees are appointed, debenture trustee. This one point was left within 3 months of the closure. No, I told you within 3 months it has to be filed, executed. Then these are your exempted companies. For DRR, we have done the relaxation was introduced. 30th April, all these kind of companies, investment has to be made in deposits with scheduled bank, incumbent securities. So question can come directly from this also. You have to learn. This is your learning part. And again, 15 days of the maturing of the debentures means amount invested by 30th April and maintained till the year end. It shall not fall the amount of 15% of the debentures. All right. Debenture trustees also, we have done all these points related to the debenture trustee. His casual vacancy is filled by the board himself. And if he is resigning by resignation, written consent of the majority of debenture holders has to be taken. Then meeting of debentures also we have done. Liability of debenture trustee. If he fails to show harm, this is important. Example 30 पढ़ लेते हैं. Roshan Bulb Limited took a bank loan in contravention regarding permissible debt equity ratios stated issue for the subscription. Debenture trustee bound to convene. So here any problem has happened, any confirmation occurred, so debenture holders can be invited on the discretion of debenture trustee, because the decision of taking loan is not only breach but also default, which is affecting the interest of the debenture. Okay. So if he fails to show the degree of care and due diligence, then any provision that exempt or indemnify debenture trustee for the breach as contained in the trust deed shall be void. So you cannot be protected. You have to take care of the as required by him as a trustee. Debenture trustee has to take care, otherwise he will become liable for all these kind of consequences if he's not. If the debenture trustee fails keeping a close watch on change in the value of asset which the debenture was secured, it is a preliminary responsibility. So you are a debenture trustee, you have to take care of my assets which are secured. It can be said he fails to show the due diligence and care. Repay and pay interest on the debentures, filing of the petition. The debenture trustees can say that the assets are insufficient or have become insufficient to pay the amount. Then he can file a petition to the tribunal, and tribunal will pass the restrictions on the company's liability that cannot have further liabilities, because you have to consider the amount that has to be repaid to the debentures along with their interest. And this is then the order of tribunal. He will order the redemption of the debentures forthwith on the principal payment after considering these are all things you have read related to redemption of reference shares. Also similar kind of orders tribunal is going to get. Specific performance of contract, he can also enforce that you should take up and pay for the debentures of the company. Central government has also prescribed the methods for securing the issue of debentures and secured debenture holders in respect of trust and one last true false we can do. If interest of debenture holder remains unpaid for 2 weeks, then he can vote on the resolutions. No debenture holder can never assume voting right. See how he's trying to confuse you. Because his interest has not been paid, now can he vote? It doesn't have any voting right unless it is converted into equity. So if your shares are converted into equity, then you can have voting rights. Though similar provision exists on preference dividend remains unpaid to preference dividend. Okay, so here we come to an end of this chapter. So within time period, we have ended your share capital and debentures, children. DRR has to be created. Yes, DRR has to be created because the amount of DRR will be used for debenture redemptions. And once the debentures have been issued, this amount has to be created. And we have already discussed the percentage of the amount to be maintained. You have to make sure that it shall not be falling the 15% of the debentures maturing during that. Very good, correct answer given, Abhijit. No action will be taken on the debenture trustee. Okay. So your provisions related to DRR is given over here. We have just started discussion on the same. Voting rights are not available. We have discussed this. Debenture trustee, everything is over. So this is your DRR provisions. You can simply learn them from my notes also. So out of the profits of the company, it has to be maintained, and for the payment of dividend, amount credited shall not be utilized for any other person. Formal treat is this here. So DRR will only be used for the redemption of debentures, which shall be created when the debentures are issued to you. Only out of the profits of the company. So how much balance shall be kept in the DRR? Can you tell me, children? Can you answer me? How much minimum balance have to be maintained? Now this is a question for you. 10%, 15%, 25%. Can you please explain 15%, 10% of the maturing somebody is given? Okay, let me open that question for you, child. You can ask your doubts now. Okay. Note before summary on page number 4.86. And all those who have given the correct answers, that's correct. Note 1. If issue results, okay. This note are you talking about? This is clear, this question that we have just discussed. Okay, Abhijit is asking, ma'am, note 1, can you tell us? So if issue results in debt equity ratio more than 1, so debt equity ratio to be maintained is 2. In case company other than private company, board of directors shall obtain the approval of shareholders. So if debt equity ratio, after issuing the debentures, your debt equity ratio is more than 1, then the companies other than private company means it's talking about the public. Board of directors approval will take the approval of the shareholders through SR. if the borrowing by issuing the debentures together with the amount already borrowed exceed the paid up share capital, free reserves, and security, then prior to the issue. So you have issued the debentures to outsiders. Now, after issuing the debentures, along with the other borrowing that you have taken from the banks and other term loans, that amount has exceeded the paid up share capital of the company. Then the borrowing shall not include the short-term and temporary loans. Say, for example, the company has taken a very short-term loan for 1 month or 2 months. That loan will not be included, but other big borrowings that you have taken. So that, along with the debentures, if that amount has increased more than the aggregate paid up share capital and free reserves and security premium account, then what you have to do, you simply have to take the approval of shareholders by passing an SC. Okay. And return of allotment, as you used to file, you have to file the return of allotment also when debentures are issued, as you used to issue for the companies. Khushbu wants me to explain the penalty for buyback. Okay, I will just explain you. Abhijit, I hope this point is clear to you, bacha. Okay, Khushbu, this is your penalty for buyback. If company makes any default in complying with the provisions as made by SEBI, because SEBI is very important, listed companies are going for buyback, SEBI has to be followed. Then a fine of 1 lakh, which makes 10 to 3 lakh. And every officer shall also be punishable with a fine of 1 lakh to 3 lakh. So in both the cases, company and officer in default, both are liable for fine of 1 lakh and which can go maximum up to 3 lakhs. Okay, so minimum fine for company and officer in default, both of them is 1 lakh and it can go up to maximum of 3 lakh. And is OR required in case of buyback of securities? Do we require OR? Yes, ma'am. No, ma'am. What was the provision? Only SR is required. All right. Thank you so much. I hope you enjoyed the session, children. Thank you, Om Krishnam, for the beautiful message. I'm glad your concepts have been cleared. Yes, Abhijit, you have to see that it shall not be falling below the 15%. You need to deposit the money. That means issuing of debentures is already depositing the money. Okay. All right. Thank you so much, children. Thank you, Khushbu. I'm glad you enjoyed the session. Thank you, Sunil. All the best to all of you. Do well. I'll be meeting you soon for another revisionary lecture, maybe after a few days, for some chapter in between. Yes, sir. I think now no more queries. So thank you, students. Thank you, Abhijit. Thank you so much, children.